Good afternoon, everybody, and welcome to today's Lunch and Learn with me, Julie Cameron. I am a business growth specialist with Action Coach Solihull, and for those that are joining us live on Facebook and LinkedIn this afternoon, welcome. Please say hi in the comment boxes, and also please ask any questions that you may have, and I will happily answer them as we go along. And if I don't manage to answer them all as we go along, I will definitely get back to you towards the end of the session today. So here we go. So what we're looking at today. Today we are looking at how to increase those profits within our business. Now, firstly, what we have to look at, and when we start building a business, we start as you can see on the screen, Brad's definition of business with 6 steps. Okay, so this is where we start at the bottom with mastery, and every business should start with mastery when we go to build it. And this is where we master our numbers, our direction, our in the respect of our vision, mission, and values, and then we move on to building a niche. And this is where we can build more marketing results, find our niche, find the marketing, the cash flow results as well within the business. And this is where we build our success. But unfortunately, for most companies, this is unfamiliar, and so they don't do it. So first of all, let's take a look at what a niche actually is. So for our definition of a successful business is a commercial profitable enterprise that works without you. So when we look at niche, the first part of this is defining it as the profitable segment in that commercial profitable enterprise. Okay, so this is where really what you do now that you've got the mastery in place, we've got a business that works, we've got a product or a service that is delivered. Now our job, very simply put, is to turn up the volume, to get the business running. Where we're getting a lot of new customers in the door, they're there for, to increase more repeat business and so on. So how do we do that? So Brad always uses a definition of a niche. So is no price competition. But first of all, what we need to understand is that what gets in people's ways that they compete, they find that they are in their head they're competing on price to find a niche. Okay, so what you have to do is sit down and look at how can we get out of price competition, because as Brad says on the screen, the definition of a niche is that there is no price competition. Most people in their mind think they're competing every day on price, and this is what our customers make their decisions on. But the reality is that price is only one part of the mix. It's a factor, but it's not the only segment of the mix that people go with. So your job as a business owner is to try and find and build a business where price is not the only reason that people buy from you. What we have to remember is that, the only time that price becomes the only reason that people buy is when you're selling or buying the exact same product. And we've seen this a number of times on the internet becoming the place that we do our shopping on. A lot of people thought that the internet would bring the end of retail, and in some places it has. But in other places, other retailers are thriving in this market because they understand we have our differences. So you have to, as a business owner, create an experience with people when it comes to selling or buying from you. And this is where we really start to understand niching, what it is it what we do, how do we look for it, and how do we actually do it? So let's look at niche creation, and this is first and foremost, we've got to understand that there are ways to create our niche, and we call that a unique selling proposition. In essence, it defines to the market your differentiation, the thing that is about your company that is different. And I guess the best way to think about this is if you look at cars. At the end of the day, a car will get you from A to B, okay? But each car is unique in its own right, and it's the same with airlines. What is the unique selling proposition of flying with one airline to another? Is it because their Wi-Fi is better? Is it because you get better food on it? And fundamentally, that uniqueness doesn't come down to price, So think about your company. What's your differentiation in the marketplace? What do you want to be known for? How do you want to be known? What's the thing that, instead of competing on price, that sets you apart from the competition? What makes you unique in the mindset of your customer that makes them want to buy from you? And then we have to take it up that one step further. All our uniqueness and differentiation is about marketing. So if we look at sales and marketing, the unfortunate side is that the majority of people believe, and I've put on there the accounting view, is that sales and marketing, all of these things go in the expense column of the profit and loss. And in a way, it doesn't work for me, mainly because if you're sitting there and your whole mindset is that sales and marketing in particular is an expense, then you're not going to do it, because you're going to see it as cash flow that's going out of your business. And that creates a massive problem within the mindset of business owners, because when they're looking to multiply profitability, we've got to get out of the price competition and pick our niche, and the same applies here. We've got to stop thinking of marketing as an expense. It's quite ironic, really, because, you watch business owners that when they've run other people's companies or they've come through that corporate ladder, they will fight to spend more on sales and marketing. Yet when it's their own business, they fight to spend less on it, because once again, they see it as an expense, and it's not an expense. It's the one thing that is almost the exact opposite of that. So if you look at it, so how does that small business kind of succeed with that view? Well, they can't. So the Brad Sugars views and the view with an action coach is, that sales and marketing is an investment. It's no longer an expense, and the sales and marketing, all of that has to be seen as an investment in order for your business to succeed. So today we're looking and we're thinking about multiplying profits, within our organization. So if you're indirectly in price competition with somebody, in another business, then how are you going to multiply those profits if you're not willing to put more money into marketing, any more money into sales, that it's an expense? Having that mentality could cost you a lot of money in business. You can't cost cut your way to massive profits. It's not possible. And I'll say that again, you cannot cost cut even to your way to massive profits. It's just not possible. You have to grow your business, and that's the way to achieve massive profits. And to do that, to grow your business, you're going to have to invest. And the number one thing to invest in is buying new customers, and that leads to marketing. And so marketing all of a sudden becomes an investment. And we talked about marketing the other day on one of our webinars. If you haven't seen it, then please do check it out. It's on our YouTube channel, and I guess, one of the big keys to this understanding is that there are different ways to do marketing than what the majority of people are doing. And again, that's on that webinar. So how do we create it as an investment? Well, the reason some people, business owners have this as an investment and others don't is two things, and I've put them on the screen. So number one, they test, and number two, they measure. And this philosophy runs on a very simple point. 80% of all marketed campaigns fail. And again, I'll say that again, 80% of all marketing campaigns fail. And so how do we, as business owners, avoid that? And that's simple, by testing and measuring it. So let's test a different advertisement, see which one works, and, so test it, see which one works, and use that more often. When you look at, say, Claude Hopkins, My Life in Advertising and Scientific Advertising, they all talked about the fact of testing and measuring being a key component, and that's what we need to do. Now, there are two elements that are a major part of you becoming a genius in marketing. And it's about how much do you measure? So, and it's, again, we get asked this constantly, so when you're looking at measuring, people always ask, how much should we measure? and appreciate that these are dollars on the screen, but if you think about it, same as in pounds, we'll get there. So how much should we measure? To what level? Well, let's just look at the example on the screen. There's 2 adverts that cost you exactly the same amount of money to run them, $1,000, So which one should we keep running, A or B? So first and foremost, we take a look at it. Advertisement A produced 1,000 leads for us. Advertisement B only produced 100 leads. So if you were just measuring that fact, which a lot of businesses do, then you would run advert A over and over again, wouldn't you? But fundamentally, it just tells you how many leads you brought in. It doesn't tell you how many sales that you got from those leads. And it doesn't mean that if you get 1,000 leads, you might not actually get any sales from them. So when we sit down, and think about this, you also have to measure how many of those leads turned into sales. And again, what level of measurement are you going for? Where are those leads coming from? Are they coming from adverts? Are they coming from referrals? And again, most business owners out there don't have that information. If I was to ask you, where do your leads come from? Could you tell me? Could you tell me that you've got 20% of the leads that come into your business are from referrals? Or could you tell me that 20% come from Facebook, or they come organic through your website? Could you tell me? Or are you running blind? Those that do only know it to people sometimes only know that, to a certain degree, and some, business owners, know how many referrals they come from. But when you actually break it down, they don't know how many they get from this or how many they get from that. And a lot of times business owners do sit down and they go, well, I don't really know. They may have come from advertising, but which advertisement worked? Which advertisement did they come from? Well, people don't necessarily know. What was the cost for it? What was the cost of putting that advertisement in there? Do they know? What sort, these sorts of information, business owners only really know, fundamentally, things like their profit or their revenue, but they don't necessarily appreciate or know the stuff that leads up to it. And this is the information that's vital if we're going to run a great, successful business and a profit multiplying business. So let's look at these 2 examples that are on the screen again. Which one's the better ad? Let's imagine it costs you $10 to send out an information kit. Also, these people have a number to call in. So you have to think about the telemarketer sales. So what's that first advert going to cost you? So let's say it's $10 a piece. So that first advertisement all of a sudden is costing you 11 grand. And the second one is costing you 2. Yeah, so which one's a better advertisement? All of a sudden, it changes around. So knowing this information is powerful, and then we look at the average value sale coming from that advertisement, and again, you look at the figures there, 500 from advertisement A, 1,000 from advertisement B, and all of a sudden then, which one would you think is the better advert? Now, again, they're the same. However, one costs you a lot more than the other at this stage. So then if we sit down and we say, what's the profit in each of them? Well, hang on a second. The first one has this, they've got the same average profit in both of them. What's the lifetime value of that customer? How much is it worth? Worth in their lifetime to the company? And then when you measure it, how many referrals do you get from that customer over the lifetime? And all of a sudden, you can then look at which advertisement should you run. And it'd be interesting to know from you guys out there, which advert that you should run. And fundamentally, when it comes down to it, both of these are fantastic adverts, giving you a return on investment over a period of time. And with both of them, the first one gives you 20 grand's worth of profit. offer an 11 grand marketing spend. The second one gives you £10,000 profit, offer 2 grand marketing spend. So both in their terms are great adverts to run, but you wouldn't have known that if you had just looked at the number of leads that were coming through, rather than the sales, the average value sale, average profit, lifetime value, and the referrals. So you run both of them and keep running them. So you keep buying new customers. But here's the thing, as I've said, if you don't know this information, if your level of measurement is inaccurate, or your level of measurement is just a guess or non-existent, you don't know the rest. And that is why measuring is so important. But then so is testing. So at Action Coach, we do 12 tests of everything. So for example, if I'm going to test an advertisement, I want to test 12 different headlines. So I write a bunch of headlines I think that will work. Now, back in the olden days, as people would say, it literally would take months and weeks to test everything, because fundamentally, in essence, you'd have to send it out to market to be tested, and you'd send out loads and then you'd look for your responses. But, nowadays, it's so simple with Facebook ads and Google ads. You can literally test all 12 headlines within the very most a day. I can put all these headlines, so 12 different ads, at the start of the day, and at the end of the day, I can come back and archive, one, because for every 100 impressions, I got 12 responses. And this one, for every 100 impressions, it only got me 5 responses. So actually, by the end of the day, I know exactly how much each advertisement headline worked. And so therefore, which is the better one to run on a permanent basis. And again, then what am I going to do? Well, I'm going to paste 12 different offers. And then, so 12 different offers. And again, I'm going to put them out there in Facebook and Google. And by the end of the day, I'll know which offer is more successful, because I'm testing the market. So literally what used to take me months to do, it now takes me less than a week, because one day I'm testing headlines, the next day I'm testing offers, the next one I'm testing emails. It's a very powerful when you get into it. And when you realize that actually you can test the market straight away. And that's why we need to do testing. So let's imagine you've got a marketing budget that's 10 grand on a particular campaign. Then within that £10, you should invest £1,000 of that to test the campaign before you run it. Because you need to make sure that you're testing the headlines, you're testing the offers, you're testing that call to action, all on the different parts of the advertisement that needs to be done. So, you're testing everything that needs to be tested, even the image, because an image can be so powerful, does it work for your particular target market, the image that you're utilizing, so you can now test the image that you're using with Facebook ads, and in my opinion, it's irresponsible of people not to test it all, it's not to, because what's going to happen is that you're not going to get the results that you need to get. So therefore, that £10,000 that you've got on that particular marketing campaign and to run it, it's going to disappear, and you're not going to have the results to show for it, because you need to test it first. So if we're looking at multiplying profits, what we need to think about is the fact that all businesses are the same. It's what we do with them that's different. The classic example is the car industry. The chassis on a VW, is the same as the chassis on a Porsche. And I guess, if you look at the VW or a Porsche, we all know what car we would prefer. And that is the most powerful secret that you'll learn, within today, potentially. At the end of the day, the business basics are the same. It's what we do with them that matters. So here we are on the screen. So if you want to multiply profits, what we've got to look at is how we impact all 5 ways in a percentage. So firstly, what you need to work out is how fast you can grow your business and how do you want to work that out. So firstly, what you simply have to do is work out your cash position and your cash flow position. In other words, you've got to work out what we call our cash flow, our cash gap. So it's a difference in the number of days between when you buy something and when you get paid for it. So in other words, if you bought stock and you had to pay for that, 30 days off the purchasing or even upfront, then you sold it 30 days later, and then you didn't get paid for that for another 40 days, then your cash gap is 70 days. And that's going to determine how fast we can grow. Obviously, the longer the cash gap is, the slower you have to grow. The shorter the cash gap, the faster you can actually grow. So keep in mind that growth requires capital investment. Fast growth requires more capital because you've got to hire more people, buy more things. Could be laptops, could be, machinery. You might have to increase the machinery that's in your business, or office space. But whatever it is, cash may be required for it, and you have to realize that and plan for it. So you need to be aware that when planning for fast growth and you're planning profit multiplication, that this isn't just a simple thing to do. You need to manage the cash as well. Now, second thing I want you to understand about these 5 ways before we get into it is that when you set a goal in business, you have to work backwards with the figures. So for example, look on the screen, and we are saying that here in this business for 50 grand profit, that's what we want to create. So actually, I've got this, please do look at the screen, and you're watching this and you're saying, out of that, we've actually got to make 150 grand in profit. Well, if you really look at it, what we want to do is work backwards. So when you're looking at how much profit you're wanting to make, then what does your, profit margin need to be? What does your average value sale need to be? What do number of transactions? What is your conversion rate? So fundamentally, what is the number of leads that you need to create to make that 150 grand on that bottom line? And this means that we've got to know our numbers. We need to know how many leads are actually coming into our business. What is your conversion? How much repeat business do you get, and so on. Now, in most ways, we can grow those numbers by 10%, So when we grow them by 10%, we increase our figures. And as you can see on the screen, I've just increased them all by 10%. And most companies will be able to grow, those things by 10% very easily and very well. So we've increased our leads, by 10%. So we've increased them from 4,000 to 4,400. We've increased our conversion rate. We've increased our number of transactions. It's all the ones in the light blue. And these are the 5 ways that we need to concentrate on, not the number of customers, the revenue and the profit. What we need to do is concentrate on the number of leads, conversion rate, transactions, average value sale, and the profit margin. Most companies can keep up with this and keep up with a 10% increase from a cash flow perspective. They can do it because, they can do it fairly well, but sometimes they need that capital injection, to keep the growth going. Now, your capital injection could come from turning your profits straight back into the company, or it can come from another form of money that comes in. In most cases, to grow faster, you're going to need to put more capital into business, and if you look at this though, it is just by increasing those those blue numbers by 10%, you're actually increasing your revenue by 46%, and you're actually increasing on your bottom line 61%. So just by looking at those 5 ways figures, you're actually having a massive impact on your bottom line and also your revenue. So you'd be crazy not to look at those 5 ways figures in a way of increasing the profits within your organization. And I want you to think about, in a way, about increasing those 5 ways even more. So if you were to double them, look at what happens on that profit figure. Look at the number of leads. You need to double it. So you need to increase it from 4,000 to 8,000. Conversion rate from 25 to 50%. Number of transactions. So instead of 2, they're 4. They're coming back 4 times a year. Average value sale has gone from $100 to $200, and so on and so forth. But actually, in comparison to making, you know, that 61, you've gone to $1.6 million profit. You know, and you need to probably have a fair bit of extra capital to be able to make this business work, and at least turn all the profit back into your business to be able to keep the growth rate going. You know, and these are the things that most business owners never really take into account, especially when you sit down and work out how far and fast you have to grow it. You know, most people never take into account the extra revenue, the extra capital that's required, the extra work or energy that's required to go into it. So let's say down, you know, I want to multiply my profits, and it's very easy to say, you know, I double check each of these numbers, you know, and you actually got to build a plan to make it happen. You know, and you've got to actually manage the cash flow and the cash injection that's coming into your business to the point where you know exactly what's going on in your business. And so time after time, you know, I want to make certain, you know, you've got to say you want to make certain that we understand how much extra energy and effort goes into that. Now, the next rule that we need to understand is the profit model of rotation, you know, and this is that rule of 10 by 10. However, what happens with the rule of 10 by 10 is that most businesses don't live by it. Now, what do I mean by this rule? Okay, so in essence, the rule basically says that you've got to have 10% of your customers coming from 10 different marketing methodology. So 10% of your customers coming from 10 different marketing methodology. So in other words, it yields that 100% of your customer base. So you've got 10 different marketing strategies and you're getting 10% of your customers from each one. Now, most companies that we come across aren't actually doing that. You know, most companies that you come across maybe have 1 or 2 ways or 3 ways to getting their customers to you, you know, getting their customers, you know, so it could be that they're getting 50% of their customers from one marketing method, 10% from another, 40% from another. So they're relying on, you know, potentially 2 methods, you know, and you think it's not funny, you know, it's not clever. You know, what happens is what I call that diving board philosophy of businesses is that, you know, if they're, you know, I've got my diving board here and they're held up, you know, if we took this one into consideration, the 50% is coming from one, the 40% from another, you know, so basically what happens if one of those methodologies doesn't work, you know, or all of a sudden it just disappears, well, your diving board then becomes unstable and that's your business, you know. So if one of them goes, you've only got one, so it will go fluctuate up and down and your business will fluctuate up and down as well, you know. So actually having 10 different methodologies actually means that regardless if one or even potentially 2 of those methodologies disappear or don't work anymore, your diving board, which is your business, is still stable. You know, and being honest, you know, with everybody, you know, it'll never work out as 10 times 10%. You know, one might bring you 30%, one might bring you 22%, one might bring you only 5%. But the goal is to manage our lead generation, to end up with 10 different strategies and getting leads into our business. You know, and with that, we then have a very strong business. We've got a good flow of new customers into our business. So, you know, what are you doing now? You know, so what we're going to do now on this webinar this afternoon is we're going to look at each of the areas of those 5 ways. You know, and we're actually going to go through some specific marketing strategies. So let's start with margins. So why do we pick margins first? Well, is there any use generating extra business with low profit margin? Not really. No, it's not the most cost effective. You know, it's the most cost effective, easiest way to boost our bottom line of any business is to get better margins within the business. Okay, so how are we going to do that? First and foremost, let's go through each of these strategies that are on the screen so that we can go forward and do this. You know, so increasing prices or margins, let's talk about this because literally it's 2 different strategies. So if I was to look at the margins on your products and services, which ones are the highest? You know, for example, Brad worked with a tire retailer and the majority of his sales were focused on one particular brand. But when we sat down with him and you looked at your margin on that particular product, it was one of the lowest margin brands that he sold. So we then looked at what brought a bigger margin, you know, what was the brand that with the highest margin? and kind of said, right, let's focus on selling this one. We put up displays about it, we start recommending it to people, and guess what? We sold more of that product with a higher margin. We're still making the same amount of sales, but we might be bringing in now much bigger margin. In fact, this tire was actually cheaper than the other one that he was selling. The way that he looked at it, he was selling the product at a higher price and therefore making more money. But actually, what he was doing, he actually made more profit on the lower priced item. And now one of the things, that a lot of business owners struggle with is pricing. I want to be clear on this. If you haven't increased your prices in the last 2 years, I would suggest that you need to have a look at it, look at how you can do that, because increased prices don't have to happen across the board. They don't have to happen at perfect levels. I mean, you could turn around and say, 20% of our items are highest moving. We're going to keep them same. We're going to keep them at the same price, but actually let's increase the other items ticket price by 10%, 12%, 15%. And I can pretty much guarantee that tomorrow, if people walked in, if you walked into your business and increased your prices on those by 10%, the majority of people wouldn't actually even notice. And understanding price is only one factor of running a whole business, and that is really important to understand, that pricing is only one factor. The second point is discounting. Basically, stop doing it. Discounting is a killer of a business, and it's the fastest way of killing the profitability in any organization. Multiplying profits comes from getting rid of discounting and instead adding value. For example, men's clothing stores, you often find that they have a sale on, okay? So you walk in, you find a suit, and I'm going to say a suit is £1,000, okay? So just for ease of the maths today. So you give a 10% discount. So 10% discount, you're basically giving away £100. Now, what happens if you were to turn around and say, you buy that suit and I will give you this shirt for free. Now, this shirt has a sales value of £100, so they're still getting their £100, but actually it only costs you £40. Therefore, you're adding a perceived value to the customer of £100, but actually the value to you is a lot less. So next is fast moving and high margin stock. So when you sit down and look at your stock movement, if you're a stock-based business or even a service-based business, look at your high moving items and the highest grossing and highest profitability services. So list all the items that you sell quickly, look at what you're not selling, get rid of that 20 to 25% of the items and put all the cash into the top 20 to 25%, and all of a sudden your profitability is going to, grow dramatically. Now, the next point is it's very hard, make it hard for people to buy, not you, and not as in like your customers, but for you, it's hard, the buy less stuff, including you as an entrepreneur, so in other words, it's very easy sometimes to just go and spend company money. If they can, they will. So in other words, make sure that somebody in your organization becomes that purchase authorization person. So in other words, make them sign off when you want to buy stuff. And it'll be harder for you to buy it. You've got to fill out a piece of paper and get somebody to look at why you're buying it. Okay. So let's look at audit costs. Whenever you sit down and look at costs and audit, when did you last sit down and look at your costs and audit them? And what you find is that when people are in a specific economic cycle, when things are good, do we audit our costs? Probably not, but when things become challenging, it's probably the first thing that we do. So if you think back to the beginning of COVID and lockdown last year, what was the first thing that a lot of businesses did? Well, they assessed their costs. They looked where they could see make savings. But actually, when did they last do that? And have they done it since? So what would happen if once a quarter, or even when the market was booming, you did that, you looked to see what your costs were, looked at the budgets that you have in place or don't have in place, could be the determining factor in your profitability. Payment terms. This is one that still, amazes me, and you think after a lot of time, people would actually get this, but we see invoices, that say 30 days, 60 days, 90 days. So if you've got an invoice you're sending out and you've got a column for 90 days, what you're telling your supplier, your customer, is that it's okay to pay in 90 days time. So what happens if you had one that said 7 days or 14 days? Actually, it's okay to pay in 14 days, it's okay to pay in 7 days. So if you turn around to your suppliers and said, right, okay, I'll pay you, now when you purchase these things, or I'll pay in 7 days, what discount will you give me if I do that? And again, it adds to your profitability, your margin. And then the final one is the systemization of the routine. So if I sit down and take a look at everything that happens in your company, a lot of times we have extra expenses because people make mistakes. If you systemize what is done every day in your business, everything that happens, and therefore you reduce the number of mistakes, then you're going to very quickly reduce the amount of expenses that you have in your company, because you're not wasting hours doing the things that really don't need to be doing anymore. So from there, what I'm going to do is go into conversion. I'll pop it all up on the screen. There we go, so that we can chat through them all as we go. So next one that we're going to look at is, so it's margins first, and secondly, we want to work on the conversion rate. And again, it's one of the most cost-effective ways of improving the bottom line of the business is working on that conversion rate. Top strategies for it, and I've put them on the screen. First I want to, I would look at, with any company, is the training of the salespeople and the training the people that answers the phone. Whether they're in sales or not, they've all got to be able to answer the phone and make a sales strategy. But in essence, the training of salespeople is one of the fastest ways to boost those conversion rates. And that's looking at NLP, it's looking at DISC, it's looking at kind of the way that we talk to people, and the way that people want to be talked to and communicated with, and that increases our conversion rate. Next to script. I'm yet to be in a company where I don't believe that scripts are a massive part of success of the company. And by the way, by script, I mean, don't write down exactly what you're going to say word to word. I mean, by writing down the questions to ask. So actually lead your salespeople down, a far more inquisitive way of questioning. So it will result in them selling the customer what they need approach, rather than just flog them whatever's in the script approach. Because we've all had those conversations with people on the phone where they've obviously got a script, and it's not necessarily selling you something that you need, but actually if they were to ask you questions, you may end up actually understanding that the customer does need something that you can offer. So the next one is guarantee, or a USP, which we spoke about before, on that unique selling proposition. What sets you apart? So let's think about a benefits list. So if you can't write me kind of a list of 12 benefits as to why I should buy your product or service from you, then how will the customer ever know why they should buy from you? What's the company story? Look at a guarantee. I use Action Coach as an example here. We have a guarantee that our one-to-one coaching, and we have a 6-month guarantee or a 12-month guarantee, and we convert clients based on it. And with Action Coach, when we put that guarantee in place across the world, it improves our conversion rates by more than 10%. So think about it within your business. What can you guarantee? If you look at your company's frustrations, what are they? And that's a really good way of looking at a guarantee. A plumbing client of Brad's did this, and he put in place a 3-point guarantee. Number 1, they'll turn up on time. Number 2, they will leave the house cleaner than when they arrived. And then number 3, all the plumbers will wear belts. Now it sounds crazy, it's nothing regarding the actual work, the physical quality of the work, but he would get comments and frustrations from his prospective customers that this wasn't happening. So now, because he guarantees it, his conversion rate is high, even though they're more expensive than the regular plumbers, because people didn't want to wait around all day in their house waiting for somebody to turn up. Therefore, if you're guaranteed they'll turn up when they say they're going to turn up, then brilliant. Why wouldn't you pay just that little bit more? What's your uniqueness? What's your story? What are the 12 benefits of dealing with your business? Those are the things that we really need to look at to get that conversion. The next one on the list is testing and measuring, and again, testing and measuring improves conversion rates so fast, so fast. And we've touched on it already today, but actually testing and measuring those adverts, those headlines, those offers, are key. Another is setting goals for conversion. This works really well. I remember one company that we coached, actually putting a bonus in place to our, to get our conversion rate up above a certain percentage. Then they got an extra bonus, and it was simple. It was a telemarketing operation, but once you get the conversion rates up, then all of a sudden those bonuses, those pay packets went up. You've got a motivated workforce. Another is gifts and offers and gift vouchers. If your advertising makes good offers, then you should be able to convert them easy. With gift vouchers, he used to, again, another example of Brad's is that he used to coach a shop, that if they had people leaving without buying, then they would try and grab their attention, so they would give them an envelope. And at the front of the envelope, it would say, please don't open this until you get home. And then inside the envelope, it had a £5 gift voucher that if they come back to the store within 24 hours, they could apply that to any purchase of anything that they liked within the store. Now, of course, if it says to you, and if anybody's out there that's just the same as me, don't open this until you get home, then the majority of people then sit there and they open it up the minute they get around the corner, so out of sight of the shop, and then they realize, hey, that's £5 towards something that I was actually going to buy, kind of a bit apprehensive about it, but I'm going to go back and get it now because it makes it a bit of a bargain. It's a very simple way of getting them to become a customer. And then once you've got them as a customer, you've converted them, you get their name, their address, keep writing to them and communicating with them, and you get them back more often. Another favorite of mine for conversion, is to get them to buy something small, because ultimately you can then get them to trust you, and then ultimately they'll buy something big from you. So keep that in mind. Sometimes you only need to sell them a small item in the beginning, to really get them back, to get that biggest sale from you in the future. And follow up. This is by far one of the biggest things I see with salespeople, with companies, where they get a lead, they spend all their time and energy and effort to get that lead. They'll call them once, twice, 3 times, and maybe they've missed a call on one of those occasions. And then all of a sudden the salesperson sits there and says to themselves, well, it's okay, I won't follow up anymore on them. I just can't see the logic. You've taken them to a certain point, and then all of a sudden, no, we're stopping. Following up is one of the most powerful and important things that we can do to get great results as a salesperson, and also to get better conversion rates. If you're still following up when every other salesperson from every other company has fallen by the wayside, what will happen? Yeah, you'll get the sale. Okay, so then let's move on to average sale. So average value sale is third on our list, so we go from margins to conversion to average sale. Now, training is a lot here. It's not a massive costly exercise to improve this number by 10%. So if we go back to our 5 ways where we increased our average value sale from 10%, maybe even 20% across the board. First thing first, upsell, downsell, cross-sell checklist. And it's an amazing strategy. For example, people go into a DIY shop to buy paint. If you think, well, okay, there's more profit actually, not in the paint, but actually in the brushes. So how am I going to sell that brush as well as the paint? Well, actually, is it a checklist? And basically then you look at writing a script around it. So, when somebody's buying paint, you turn around and say, well, are you okay if I just go through the list of potential other things that you may need to stop you having an extra trip back to the DIY shop, when you get home and realize you haven't got the covers, the brush, and so you go through it. So, and you say, I'm glad you're getting the paint. Would it be okay if I run through my checklist to make sure that you've got everything at home you need to be able to do the right job? And all of a sudden, you can guarantee there'll be one thing, two things, three things that that person has forgotten to get. So you've got to boost the average revenue per sale, but also you've boosted the average profit per sale. And let's think about McDonald's, classic example. Would you like fries with that? And again, even with a florist, we all sit down and say, how do we improve our average, sale? And I said, you think, well, okay, florist, is flowers, but actually, would they like a balloon with the flowers? Would they like a bottle of champagne? Would they like a teddy bear? Would you like to send chocolates with it? Sometimes, but having a checklist with that so that you as a business owner or the person that's making that sale doesn't forget to ask those questions, and it's again, testing and measuring is a really important one, and setting goals with a team. You have to kind of set that goal. So what is going to be your average value sale today for the entire team? It's going to be X. Well, if we achieve X, everybody gets, say, cinema tickets for the weekend. Make it a game, make it fun. Working and being at work and in that environment should be fun. And people, if they enjoy what they do, they get real results from it. Scripts. And I know that scripts and training on both conversion and average value sale, if you're not scripting and training your salespeople on a regular basis, then how can they get better at achieving results? If you're not giving them good scripts and putting them through that training process, you want them to get better. If you want them to play the game of business better than, you're better to train them better at that game of business. You've got to train them. Next one, A and B grade customer focus. I've talked about this before in a webinar, but fundamentally what it's saying is that some forms of marketing will bring you good kind of quality leads that can really convert easily. They'll spend a lot on a particular purchase. Other advertisements have a negative impact on the conversion rate, and that average sale will go down. And that's why measuring is so important. But if you look at some advertisements and saying, wow, that advertisement brought me real high quality leads and converted really well and a really big average value sale, you want to focus on those types of adverts, run more of them, and less of the other ones that bring you that low average sale and low conversion rate. And this is where that testing and measuring comes in, and it's so important. Perceived value offers. Yeah, it's very similar to what I was saying about not discounting, that perceived value is far better than cheap discounting. How do we get value out of that? What is it that we do? Payment terms and methods. Very simply put, have we got all the methodologies that people can pay? So are we letting people pay on PayPal, credit cards, what's our terms and conditions, is it 7 days, 20 days, whatever, have we got them all in place? What is about bulk packaging? Well, think about it, you go to McDonald's, I use the McDonald's because they do it really well. You can go in and you can order a burger, your fries and your drink separately, or you can just go in and order a number 3 and you get your burger, your drink and your fries together. So it's bulk packaging. It works well to improve that average sale. It gives a reason for people to buy more when they're already buying from you. And then last but by no means least is exclusive lines of products, that you're the only place where people can buy that from. So is it a brand that you have created? Is it an exclusive brand, that they can only buy from you? So next, let's look at, I'll just get these all up. Ooh, there we go. So let's look at its repeat businesses, the number of transactions. What's the use of buying more new customers if we're not getting them back again and again, or as often as we should be? And that's when we have to look at the number of transactions for our business. What are we actually going to do to get more results? Number 1, database. What level of database are you keeping? Now, when I sit down with a lot of businesses and look at their database, they're using some form of, say, accountancy software, and it's just not great from a marketing perspective. You need a great database and a great CRM system to become a great marketeer. has to keep information about your clients, your customers on there. You need to know what their full name is, what did they buy, when did they buy it, what's their kid's name, what's their dog's name, different information from all these people that allows you to keep it and be able to market to them that's suitable to their needs. It's not just suitable about what they bought last, it's about potential future purchases. There's a lot of great CRM systems out there. Some are free, some have a cost element, but they need to be able to collate for you what data you need to increase those number of transactions that their customers make. So, newsletter, direct mail, are you using direct mail? Are you direct mailing back to your customer base? Having a newsletter out there helps people be informed that you're still there. Does it have an offer on it? What is your call to action? And then that brings us to closed door sale. A classic example, Brad had a client that was a carpet and rug dealer. So the rugs came in lots of 12 and he told the staff to order 12. Now the staff order wrote 12, but actually what he meant was he got 144 of the rugs when actually he just wanted 12. So he did, all of a sudden, got all this stock. So he did a closed door sale, and this letter went out to all his customers, all his past customers, and basically said, our mistake is your gain. We're selling these rugs, here's the deal, and it's only to past customers. So it's a closed door, it's not open to the general public to walk off the street. And here's another one, call cycling. When was the last time you called everybody in your database? And here's a thought for you all out there. There's 52 weeks in the year, it's 26 letters in the alphabet. Even if you were to call a letter per week, you'd call everybody in your database twice a year. But what you have to remember is, why are you calling them? What is your offer? What is your call of action? To increase the number of transactions, another one could be to plan future rebooking or plan future purchases. And a good example of this is a florist or a card retailer, where they ask you if you want reminding of this event next year. Yes. So where will you buy that card from? Where will you buy that flower, those flowers from? So regards to the florist, for example, what is the date of your anniversary? It's November the 1st. So a week before November the 1st, you get a call saying, hi, it's your florist here, it's your anniversary next week. Would you like us to send flowers for you? Of course. How proactive is that? How is, that is going to, increase your number of transactions potentially. Which allows us to rebook until further notice. A hairdressing salon, you will always, let's rebook, let's look at 6 weeks time, let's look, get hairdressers at the moment are booking right the way through to Christmas because people want that appointment. So let's get you rebooked in. Again, it's increasing those number of transactions. I don't know of a hairdresser, when you leave the salon, it doesn't say, should we rebook you for the next time? It's increasing the transactions. If you said, oh, I'll call you in 3 weeks, you're never going to maybe get them booked in. Another one is a frequent buyer program. If you don't have something in place to take care of your A-grade customers, you need something. How will you give them real benefits for the frequent buyers within your organization? How many of your database have Facebook, Twitter, LinkedIn? Keep in contact with them with everything that you're doing, because if you keep in touch with them on a regular basis, if you stay in communication with them, it's easy for them then to purchase from you again and again. But if you're not there, how do they know that you're not, that you're still there? Every company, every business out there should have a referral campaign, something where you're offering referrals every single month. PR, I've got that out there, salespeople, telemarketers, most companies, they have too few salespeople and too many operational people. So how many operational people do you have, and how many salespeople do you have? How many telemarketers? We've got, telemarketers doing lead generation, they're dialing prospects for you. Let's look at all of that. That's gone on to the lead generation aspect. Let's look at the number of transactions in lead generation. You're doing it. So what are our takeaways from today? Evaluate your current pricing. Let's look at where you potentially can increase it. Next, look at your USP. What are the things that are different about you as an organization? Are you testing and measuring? So it could be your average value sale, it could be your average sale per day. You might have it as a number of leads. You might just not do leads overall. You might break it down to how many leads per hour, how many hours of data do you get most leads from, and so on and so forth. And then finally, look at your 5 ways. Look at the number of leads coming into your business. Look at strategies that you can that you have. It's kind of looking at lead generation, as I've said there. It's looking at direct mail, flyers for host beneficiaries, strategic alliances, advertising, PR, social media. It's looking at the increase in the number of transactions. How can we do that? It's looking at your conversion rate. How can we convert people? It's looking at all these aspects, and putting strategies in place to how you're going to increase that into your business by at least 10%, because fundamentally that's where we're going to make our profit, and that's how we're going to increase that profit by a lot more than 10%. So I hope you've enjoyed today's Lunch and Learn. It's been great to have you join me on the call this morning, or this afternoon, as the case may be. I am here on Monday when we have a guest joining us to give you a bit of an insight into automation of our businesses. So look forward to seeing you all then. If you do need any help with your 5 ways, or if you need to look at any of the 5-way strategies, then please do reach out. We're always here to help and happy to do so. So thank you for joining me today.